Hi everyone, and welcome along to the Sunday market analysis show from Actions to Wealth. My name is Paul Bodwell. I am the founder of Actions to Wealth, and joining me this Sunday, as every Sunday, as part of my team, we've got three in today. We've got Julian McCree coming in to do macro market overview. We've got Linka coming in to do trend trading. We've got Orlando to come in and do US dollar. Three really interesting sessions right now. We face at the moment definitely increased and possibly you've got to say short to mid-term potential for high interest rates. We've got geopolitical issues with the war between Russia and the Ukraine. But it really is a macro markets time. We're going to go straight to Julian McCree and get his take on macro markets and how they're affecting the markets as we go right now.
Hey Paul, thank you for that, and welcome everybody wherever you are in the world to another episode of the weekly market update. So what are we going to talk about today? Well, there is so much to talk about today that what we're going to try and do, I'm going to try and scoot through things as quick as I can. And for those of you that are just listening to me talking about on the Developing Your Edge session that we had just previously to this, it's going to be repeating some of that, but this gives you an opportunity for those who were listening to come in with some questions. Anybody that has anything to ask, please ask away. As always with this is a educational show, and I am, wherever I give what I may consider to be cheap or expensive markets and maybe try and give you an idea about where the future direction may be, it is for educational purposes only. Whatever positions you take are really your responsibility, and I can't, or anybody else at Actions to Wealth can't be held responsible for any of profits or losses that may occur. That having been said, guys, what are we going to do? So I want to just have a quick run through what I call the Super Six. I'm afraid we don't have time to do cryptocurrencies today, but for those of you that are aware, Ethereum and Bitcoin both bottomed recently. For those of you that are also aware, if you're trading crypto, you know that we're at a major resistance point just coming up below that 3,000 level in Ether. And as a result of that, is it a new trend or is it just a bounce to a sell zone? So I will leave you to make those conclusions, but please do that technical analysis work just to get a feel for it. Maybe one of the other presenters who's going to follow me may be able to develop that in more detail. I'm going to look at these markets that you see in front of us really super quickly because there's a few to go through. So here's my overall FX outlook. The euro I see as, is it a bear market bounce or a new trend? Well, if the conflict was coming to an end, we could argue it may be a new trend because we're still in a conflict situation. One may argue quite comfortably that it's possibly a bear market bounce until we have resolution. For me, within the Central European conflict right now, then I don't want to change my opinion that something new is starting. It's probably more just a continuation of where we were. Dollar yen. This is an obvious one, guys. It's going from the bottom left to the top right. There's nothing more to be said, apart from the fact that this is a conflict trend, right? So be aware of that. It was building before, still going on now. We're going to look at that chart in a second. Finally, the Aussie, right? The Aussie I've been keen on for weeks and weeks and weeks now. For those of you that heard me talking before, you know that I love this market. You know there's lots of reasons why. We all love Australia anyway. And now the floods have stopped, it's stopped raining and it's back to the normal traditional sunshine again, autumn sunshine, making Sydney possibly the loveliest city on the planet, yada yada, because it's all come here, by the way, Lenka. We're now getting crappy weather over here in Auckland. The Aussie market is going to get back to basics, which is they're making tons of money out of commodities and therefore it's a growth story, therefore the Aussie should go up. Not very complicated, I'm just going to run that by you. Here's some charts. Okay, this is the euro. This is why I'm saying, if you believe conflict is either ending or coming to an end very soon, then ceasefire stuff, okay, then a new trend may start. In the meantime, all it looks to me like is a bounce in a bear market. I'm just going to move on to the next one. That blue line for me is major resistance. This is a little bit of technical analysis here. Nothing more complicated than drawing a line across a chart. Just bear in mind, it's held us in for quite some time. And for those of you who are Elliott waivers, right, you can see a minor ABC corrective move straight in there, which is the last three waves. For those of you that are thinking that this is looking at the chart behind me while I'm speaking, some kind of sentiment cycle shift and a higher low, you need at least 8 sessions, 8 periods between the initial low and the higher low to actually qualify it. So this to me doesn't qualify. It looks more like a bear flag / triangle / something or other technical pattern like that. Anyway, point is, not very bullish, still think trend continues. Dollar yen, enough said, right? Lower left, top right. How many higher lows do you need, right? It's a bull market. Run with it. Just remember it's a conflict bull market, and so could do crazy things again if there's a resolution to the crisis. Okay, the next chart is Aussie. What am I seeing here? What I'm seeing here on the right-hand side, 3 days ago, what did we have? We had a higher low which printed a ring low formation, which then had a significant acceleration upwards. Okay, this is classic, absolute classic, right? Acceleration point bull market stuff, right? Doesn't get any better. Are we going to go back to 72 cents again for some time? Who knows? Most likely we shouldn't get anywhere near it. This is now a market that could be on its way to 80 and above. I'm just going to leave it there. Okay, finally, commodities. This is some stuff well, not finally, but next on to commodities. This is some stuff I wrote a little while ago, actually 8 months ago, right? All of this is completely true now as it stands today. All that's different is that I think now we're seeing we've just had the second major advance of this secular commodity bull market. Okay, really important. Okay, so that's all that's really changed. Underlying this, the supply-demand situation has not shifted at all. If anything, supply is more constrained than it was before, justifying a fundamental move even higher in prices than we had before. As a result of that, trying to take a breath here, what are we thinking? Well, oil has done its second bit, right? If you look, that move that we had started back in December through to where we are now, I consider that to be the second leg of the bull market, or the third wave if you're an Elliott waver, right? So this for me has been quite significant. Does this mean the end of the oil market? I don't believe it does. Do I think we're going to consolidate for some time? I absolutely do. Wow, it's been pretty crazy out there. We've got implied volatility of 80%. Okay, that means, for those of you that don't know too much about the oil market, normally it's at 30%. To go to 80% means you have some crazy price moves. And we know what crazy price moves in. That big red line that we see about a week ago was $22. That's a whole year of oil movements seen in one day. Absolutely nuts. You go down to a 240-minute chart, it happened in like a 4-hour period. Completely crazy. Welcome to the world of crazy. This is what happens when you're trading a conflict market. So that's why, as I stressed with Ainslie when we had our session a little while ago, I said you've got to manage, and we both said you've got to manage risk in this environment. If you're trading dailies, you're probably trading the wrong chart. It's not short enough. You've got to be on hourlies or 240-minute charts, okay, if you're gonna make any serious trades. Otherwise, your stop loss is what, $30? Well, that's insane. When we look at gold has been boring for so long that everybody went to sleep. I don't think anybody had a gold position for months, right? Months and months and months. You know, certainly the market didn't. Collectively, gold positions in the ETF GLD were the lowest they were for some time, until that big day about 3 or 4 weeks ago. I can't remember when it was. I'm going for 5 weeks ago now, when somebody bought an enormous amount of gold, like to over 20 tons of gold in one session. Right, took all the market makers short. What they did with that was demonstrate the fact that maybe they saw something coming which none of us could see, or maybe they just took a chance that things were going to get rough. The big question I have with gold is twofold. Number one, if it was a really flight to quality market, why isn't gold $500 higher? Okay, and the second question is, what next? Well, the seasonals, the cycles, they're all topping out here. I see gold as consolidating. I don't think we're going to collapse. I see it as consolidating. This is normal if you believe we're in leg one of the secular bull market for gold, like I do. So here we're seeing now a new market unfold. Stop loss for all of that is 1700 something or other, right? But until we get down there, it's a new bull market for gold. I expect to see the market consolidate as we go into this cyclical down movement that we're probably due about this time for the next 2 or 3 months. Then we might set off again. I'm really excited about July and August for gold, because the cycle will line up with what is potentially a short-term corrective move, then leading to, believe it or not, a bigger move than what we've had. That sees gold up to 2,500 potentially. Not calling it there, I'm just saying that's a potential possibility if you're looking at this as a wave one, or the first leg of that secular bull. How are we going to get up there? Why are we going to get up there? I do not know, but I'm just saying it's a possibility, unless we take out the 1700s. So finally, guys, look, last thing I want to talk about is the S&P. There's no chart of the S&P coming up. What I am going to show you is that many stocks, right? There are many stocks in the NASDAQ and in the S&P 500 that have been absolutely taken out to the woodshed, right? So this is what you have to do. You've got to think about on a wider scale, are we at an inflection point now for those stocks? Because they become fundamentally cheap, certainly compared to where they were. Right, couple of examples. This is the Facebook, Amazon, Apple combo, right? The FANG stocks. Okay, this is via an ETF called FDN. If you look at what's happened in the last week, that big green bar down there, that big green bar is the last week. Clearly a reversal. Is it a reversal in a downtrend, or is it a new trend starting? I think time is only going to tell. One thing we know for sure is it's a lot cheaper than it was. So what would cause it to continue to go down would be a real recession. You know, sometimes the market predicts a recession, but it doesn't eventuate. I think this may be, unbelievably, one of those times. So what other things are interesting in this space? This is Cathie Wood, one of my favorite bull market investors. She made a lot of money for her investors with her Ark Fund during 2020 in the pandemic run, right? Something crazy. I think she's earned about 25% per annum since she started the fund, right? Not so recently. So this is a market, a fund that went up, and it's called ARKK, the Ark Fund. It went up to over $160 back in tail end of, when was that? The beginning of 21, right? Since then, it's been in a bear market. Where's that bear market taken it down to? Well, last week it traded 53. Okay, 160 to 53 for a fund. That's not a stock, it's a collection of stocks. So I'm saying some things out there are so cheap, you've just got to go, well, actually, do you know what? Okay, so that's why I'm looking at things like this as being a recovery play for the time being. So we're moving out of that safe area back into the slightly more risky area. Maybe that's an asset allocation decision you could think about. Anyway, I just wanted to share those things with you guys. Paul, that's it for me. Just an update, a quick scoot around for what my thoughts are, and that's pretty much it. So thanks, guys. Any questions on that, please shout. I haven't seen much in the chat from anybody, but I will now pass over back to you.
Yes, Julian, thanks for that. And great to see so many people in the room for the update today, and I'm sure for your macro market update earlier. Remember, if you're looking to join Julian, he does his macro market update on the third Sunday of the month and comes in to join us the same Sunday. Different members of the team each week. Julian also for Actions to Wealth graduates exclusively for the first Sunday of the month. Thank you very much for the session, Julian. It really is a time of don't you love it when markets are interesting? Markets right now are interesting, right?
Definitely interesting.
Cheers, mate. We will see you in a couple